Bloomberg Audio Studios.
Podcasts, radio, news.
Merryn Talks Money listeners, I have exciting news. I am launching a weekly Merryn Talks Money newsletter. This is going to be the place, the best place to get micro to macro thoughts on your money and your investments. The first edition will hit the inboxes on Saturday of Bloomberg subscribers and Bloomberg subscribers only. So be sure to sign up to bloomberg.com/newsletters or check out the link in our show notes. I hope you're going to like it. Welcome to the Merryn Talks Money Weekly Roundup, our debrief on the biggest stories in markets and economics. I'm Merryn Somerset Webb, editor-at-large for Bloomberg UK Wealth. And, you can introduce yourself, John.
And I'm John Stepek, senior reporter and author of the Money Distilled newsletter. Soon to go behind the paywall as well. So sign up for Bloomberg.com.
Yeah. We're both going to be behind the paywall. Now, you'll still be able to listen to the podcast, by the way. That we're not going to charge you for. But if you want to read our written words of wisdom, you are going to have to be a sign up to Bloomberg. So you can see that in the show notes, as I said earlier. Now, John. You haven't got any cryptocurrency, have you? Nothing. Not a single token. Not a penny in it. Nothing.
Actually, I do have some obscure thing called Bitcoin Cash that our mutual friend Dominic sent to me. For services rendered at one point.
Oh, we'll talk about that offline. Fascinating.
I got 100 quid's worth. It's pathetic.
100 quid's worth. Yeah, this is my way of leading us into the fact that we have got to talk about cryptocurrencies today. We flagged in this very show only last week that the re-election of Donald Trump was going to be excellent news for Bitcoin and for cryptocurrencies in general. Now, we're speaking in the middle of the week and Bitcoin surge has paused, maybe for a while, maybe not for a while, but it'd see a huge 30% jump in value as a result of Trump's rhetorical support for crypto. He's been talking about it a lot. It's currently valued at around $86,500, but of course it's not the only cryptocurrency enjoying something of a boost. Dogecoin? Help me out here.
I think Doge. I think it's Doge.
I think Doge?
Yeah.
Dogecoin, which, by the way, I own, has seen an 80% increase in the past 5 days, partly due to billionaire Elon Musk's promotion of the token. It's now considered to be one of the strongest performers in crypto. And I will just add that I did say I own some Dogecoin. And I do, but I have recently checked my Coinbase account and my Dogecoin is currently worth £10.42. Gonna really need to move from here to drive my retirement. Right.
I mean, it is a joke coin. And that is a joke amount. So that's quite good.
Yeah, no, it is. But, I know it's a joke coin and I bought it as a joke, actually, mainly to irritate my husband. But kind of the joke's on me, given it's still only worth just over a tenner, right? Yeah, one day, John. One day. My Bitcoin is worth a little more. My insurance Bitcoin. Now, we are both getting into quite a lot of trouble on Twitter in general, because every time I write anything about Bitcoin, I get hordes and hordes and hordes of replies from the crypto bros telling me how stupid I am, telling me how stupid you are, sorry, John, and how useless we are not to have educated ourselves earlier, and how one day we will understand if we would only come to the subject with a little more humility and have more expert guests on. And they keep recommending experts to me, this expert, that expert. And I'm like, I am not sure that you people really understand the difference between an expert and a siloed ideologue. You know? Is that unfair?
Yeah. There's a certain cultishness about Bitcoin. And the one reason that I actually have, if I'm 100% honest, I have a slight soft spot for it is because this reminds me of almost exactly what the gold bugs were like in the early 2000s. And at that point, when we were writing about gold, it was something that the mainstream media wouldn't touch with a 10-foot barge pole. And, you couldn't find an IFA, or certainly not a respectable wealth manager, who would even give gold space in their portfolio. Whereas today, they all say, yeah, have 5-10% of your portfolio in gold. That's a decent diversifier, blah, blah, blah. So, there's a bit of me that sort of sees remembers that and sees where some of the frustration comes from.
And we should actually note, with that in mind, that that Deutsche Bank has just put out a long-term asset return study, lessons from the first quarter century of the millennium, in which they point out that gold has performed better than the US equity market over the first 25 years of the millennium.
Yeah, I mean that's really interesting. If because in 2000, if he'd said, right, the asset to buy and hold right now is gold over,
which we did, by the way,
equities.
which we did.
I guess. Good point.
Just saying.
But it did, and it has outperformed since then, and that's kind of fascinating in and of itself. And probably speaks to balance sheets, and then in a funny kind of way, I guess Bitcoin is actually an offshoot of that world which has been very kind to gold. It's a world where faith in the financial system, the size of government balance sheets, the size of central bank balance sheets has kind of shot up. So the two have got, there's a certain sort of relationship there. But it's never good to be cultishly invested in any asset, whether that be.
Although if I'm fair to our audience, I would say maybe I've historically been a little cultish about gold, but I don't regret it. Right, let's talk. let's talk. It's done me a lot better than our value stocks, got to say. Let's talk a little bit about why this is happening. I mean, obviously, it's a lot about the election. It's a lot about Donald Trump, about the likelihood of a crypto-friendly government across the board. We're likely to see some new cryptocurrency-friendly legislation. There's almost nothing here that appears to be negative to the cryptocurrency market. Its total capitalization, market capitalization, has hit an all-time high. We've seen extraordinary levels of activity. There's another stat from Deutsche Bank here, 24-hour trading volume exceeding $400 billion. So you've got a lot going on here.
Bitcoin's also bigger than silver now, in terms of market cap.
Yes, I saw that.
Use market cap.
Okay. So there's lots of things that could happen here. We'll have more regulatory clarity. We'll have more institutional participation, presumably as a result of this regulatory clarity. So we can expect even more money to pour into Bitcoin ETFs. We'll have a better infrastructure, and maybe we'll see a broader adoption of cryptocurrencies among not just the institutional, but also the retail market. So there's that. We've also got enormous momentum behind it. We've got possibly lower interest rates coming, and that's good for everything growthy, and Bitcoin tends to move alongside growth. And then the final thing, which you mentioned briefly earlier, is de-dollarization, fast rising debt, general global tensions. If you think of crypto a bit like you think of gold, then it's going to be in there. And here's another fascinating stat for you. Again, I'm pulling this out of Deutsche Bank. I think it's really interesting. The BRICS nations now conduct 28% of cross-border cryptocurrency transactions. So that suggests that it really is important that cryptocurrencies are facilitating global economic flows, international remittances, etc., in a way that we have talked about on this podcast, by the way. We had lengthy conversations, did we? I can't remember which guest it was we had on who talked to us a lot about the way that cryptocurrencies, and Bitcoin in particular, are used for economic transfers and remittances across the third world. Was that Lim?
I think that was Lynn Alden. The one that they keep telling us we should have on, and who we have had on.
Yes, the person people keep telling us we should definitely have Lynn on, and I keep saying, no, but we had Lynn on, and leaves them going, well, then why don't you understand?
She was very good.
Very, very good. Yeah, very good. Anyway, so all these things. So, John, does this lead you rushing out now to buy Bitcoin and accepting that you and I, and me in particular, have been completely wrong on Bitcoin ever since that tweet that I wrote that thank you tech bros for dragging up back in 2011, when I said that Bitcoin at $28 was a mania?
I mean, it was a mania at the time.
It was a mania.
It's been through a number of manias, and Bitcoin's been through at least two major bubbles and busts now, and it's survived. Look, my view on Bitcoin hasn't changed. I think it's a real thing. I think it has a use case. I just don't know how to value it, and I think the valuation is largely driven by flows, which is, very indicative of the era that we're in. Pretty much every asset valuation is driven more, flows have become much more important than fundamentals. and I don't know when or if that's going to change. I wish I'd owned it when I first tried to buy it in like 2015, and my stupid bank stopped me from buying it.
We've both been there, haven't we?
So I would probably at least have. I would have sold it at some point and bought a small car with it, but I like to think that I could be a millionaire by this point.
That is the important thing to remember. Everyone, the likes of you and me, John, say, well, I wish we bought at this point, I wish we bought at this point, I wish we bought at this point. We forget that we would have sold it.
Yeah, definitely.
That we would not still be holding it now, and we'd be living with that kind of seller's regret, and we would then almost definitely buy in at the top of every cycle.
Totally. We'd pull an Isaac Newton for absolute certain, the whole South Sea bubble thing.
We would. And that would not be shameful.
You like how I compared this to Isaac Newton there? I think that's
I did. I really appreciated that. Thank you. Now, listen, there's something that I want to talk about, which is the possibility, and I'm not just saying this because I don't have very much Bitcoin. There is a possibility that is beginning to be discussed that Trump's regulatory regime may be very crypto positive, but not necessarily Bitcoin positive. And I've been talking to Russell Napier, the financial historian and founder of the Library of Mistakes, who we've had on the podcast before, and we talked to and about a reasonable amount about this. And he makes a very good point. He says, look, Bitcoin is a portal that allows savers to avoid measures that push savings towards funding national investments. Trump is a nationalist. He's going to want to use national savings for what he perceives to be the national good. So maybe that's going to make him move away from Bitcoin slightly towards actual stable coins. Now, they're the opposite. They're backed usually by short-term treasury securities, and they attract funds into the dollars, into the US government. So they may turn into not just a means of transaction for Americans, but also a store of value for foreigners who don't have easy access to dollar deposits. So that not only brings funds into the dollar, but also provides funds that Trump may be able to direct to what he considers to be the national good. So there is a difference here between Bitcoin and stable coins. So when we talk about crypto, we have to remember that crypto isn't one great big mass. It may be that we now move into an era where all the things that people have discussed with us on the podcast about the things that are good about crypto in general, changing the way companies run, changing the way various legal processes run, changing the way the infrastructure of finance is run. That may turn out to be the key thing under Trump, as opposed to Bitcoin itself.
Well, I suppose that's the interesting thing. And this is one reason, obviously crypto's a thing because stable currencies are stable coins are the thing that actually worry governments, and they're the reason that we're getting central bank digital currencies, CBDCs, because fundamentally the government cannot have the private sector taking over or taking a large chunk of the currency business. That's basically, and you've pointed this out before, governments have always made sure that the monopoly, in fact, also monarchs as well, the monopoly in currency issuance must always be with the leaders of the country, basically. And crypto has posed a threat to that, and that's why central banks and the BIS have taken it seriously. And you're right, and I think the risk here is that the sort of ideological underpinnings of Bitcoin and crypto specifically were all about essentially escaping from government control of currencies. And the irony of ironies, as always is that, as you say, maybe Trump is the one to mainstream them, and maybe he mainstreams them by making, Bitcoin a reserve asset that backs the stable coin version of the dollar type of thing. He sort of brings it into, under the control of a kind of centralised kind of power. And I realise a lot of people will be spitting out their tea when they hear that. But that's kind of, if you're excited that BlackRock have launched a kind of, an ETF owning Bitcoin, etc.,
then
that's the
then you're not really, Yes.
Yeah.
I mean, you're not there with the original purpose of Bitcoin. It's supposed to be a transaction currency. That has not happened and it's long been taken over by other things in that area. It's supposed to be a store of value. And you can't really call it that because of the volatility. I mean, you can say it's gone up in value, but that's not the same as being a store of value, is it? And of course, there's this idea that it was supposed to operate outside the system. And obviously, it's now being pulled deeper and deeper into the system. And one thing I might add to that, by the way, is that in the general abuse I get on Twitter, thanks Tech Bros, the general abuse I get on Twitter, a lot of it is about, well, if Larry Fink thinks it's an asset class, then you should think it's an asset class too, and what's wrong with you, etc. And the point I would say to that is that just because big institutions launch vehicles that allow you to invest in a product does not mean that they have a particular belief in the long-term value of that product, of that asset class, simply that all products in which you invest make big institutions money. So, obviously, if you're going to set up a Bitcoin ETF, you assume that Bitcoin has got some longevity, but it's not a vote of confidence in its long-term value. It's a vote of confidence in the fees that you can gather from creating a vehicle in which other people can invest in. I mean, it's different. It's different. So please, everyone, stop sending me tweets saying that it was good enough for BlackRock. It should be good enough for me.
From a practical point of view, I think that the best approach to investing in Bitcoin that I have seen is probably Charlie Morris's bold idea.
Yes, it is.
That Charlie
and I think we can probably say to that, before you tell us what bold is, I think I will also say, everyone telling us on Twitter to get Charlie Morris on, he's been on.
Yep.
John, remind us what bold is.
Basically, Charlie's got this mix where it's something like the proportions vary, but it's a big chunk of gold with a little chunk of Bitcoin. And the great thing about it is that because they kind of have similarities, but they also have differences. So when one's going up, the other's going down, and vice versa. But also it smooths out the volatility. And I think it's returned, I could be completely wrong in this because I don't have the figure in front of me, but I think it's about 80% this year, which is much better than, it's not as good as holding Bitcoin by itself, but at the same time, there's no point at which you'd been looking at your portfolio going, oh my God, and kind of like sobbing and worrying that you weren't going to be able to pay your mortgage that week or whatever.
Yeah.
So, that's so 80% is quite respectable. And Charlie's been banging the drum on this for years now. And I think he's pretty much the only person I can think of, certainly, that's talked about it in that respect. And he definitely understands Bitcoin for anyone who is, that way inclined. So no, I think his approach is the best.
Yeah, do you mean he doesn't need to educate himself?
He doesn't need to educate himself.
Doesn't need to educate
and
himself.
Obviously,
or
Charlie's
approach the whole
very
thing with
humble.
more humility.
Yeah, humility is the first word that springs to mind when I think of Charlie.
Okay, well, that's interesting. So anyone who hasn't listened to the episode that we did with Charlie, do go back and listen to it again. It's very interesting.
Actually, Summer has very kindly just showed me Charlie's most recent update, and so gold has returned 56%, which is better than gold and not as good as Bitcoin.
God, I'd take that
good.
though, wouldn't you?
I would take 56%. Aye.
Crypto's done very well. Gold has done very well. Crypto has done better. You could have done pretty well by having both. You may think that the future is very certain for Bitcoin, given that Trump appears to be a backer of Bitcoin, but there are all sorts of dynamics out there that you don't and we don't yet fully understand. The future is never certain. Anything else to add, John?
No. Like I said, obviously all complaints to someone else on Twitter.
Oh, absolutely, and particularly about Bitcoin. And by the way, one last thing, it might still be a mania. Might be. Who knows? Thanks for listening to this week's Merryn Talks Money debrief. If you like our show, rate, review, and subscribe wherever you listen to podcasts. Also, be sure to follow me and John on X or Twitter at MerrynSW and at John_Stepek. John, have you joined Truth Social yet?
No, but I intend to.
Excellent. Get on with it. I have at Merryn SW. This episode was produced by Summer Sadi, production support and sound design by Moses Andam. Questions and comments on this show and all our shows always welcome. Our show email is merrynmoney@bloomberg.net.